That is the closing bell on Wall Street, and now it is market domination overtime. Let's see where these major averages ended up. And Christine, we had some meaningful moves in the popular averages today. Look at the Dow, finishes up triple digits, strongly in the green. You tack on 418 points. The S&P 500, your broad gauge, up nearly 0.6%. And your tech-heavy NASDAQ finishes down only about 0.1%. That is well off the lows of the session.
Yeah, what a change we had since from markets earlier today. And I almost wonder, as you get closer to, announcements like we're going to hear Wednesday, if, just knowing, we just want to get closer to it, have the announcement made, and then maybe that's
some clarity, some specifics.
Right, and then maybe that's a catalyst to move higher because it's like, okay, now we know it may be good or bad, but just knowing, and we saw a lot of that.
Even if it's bad, you'd at least have some certainty.
You
could start plugging numbers into models.
Right, and I think companies will, certainly react to what they hear. Like I said, earnings season's coming. They'll have a little more clarity that could filter through to guidance, which many of the ones that have given guidance so far are giving a non-tariff flavor of, non-GAAP guidance because they just don't know how to price it in yet or how to factor it into their models. So I'm wondering if investors too are feeling, okay, just like tell me something, but realizing the overall, economy is still fairly strong, and we just, we want to get this figured out and kind of move forward.
All right, we'll find out on Wednesday. Thank you. Well, WTI saw its biggest daily gain since President Trump took office. Yahoo Finance's Inez Ferre joins us now with more. Inez.
Yeah, that's right, Josh. And if we just take a look at Brent crude, it's up more than 2.5%. You're looking at a WTI that's up more than 3% for this session, hovering above $71 per barrel. And a lot of this has to do with those threats that we heard from President Trump, that he could impose secondary tariffs on any country that imports oil from Russia. So any imports from countries would be tariffed here in the U.S. if they're buying oil from Russia. This comes after also the president had announced something similar when it came to Venezuela last week. So we are seeing some gains for oil, also energy equities as well, and really erasing some of these year-to-date losses that we had seen for oil earlier.
And Inez, what's the latest on gold?
All right, so gold is at all-time highs, and we have been seeing this is now the 18th all-time high of the year for gold. So we're looking at gold futures that are above 31.50 right now. Year to date, we're looking at gold that's up 18%, and this has to do with so many factors, including central bank buying, including inflows going into gold ETFs, and we've had Wall Street really playing catch-up when it comes to their price targets on gold. You had last week Bank of America increasing its price target to $3,500, Goldman Sachs increasing theirs to $3,300. You've even had 4,000 being floated by some analysts because of the rate of change when it comes to these gold prices and the time that it took, an accelerated period of time that it took for it to go from 2,500 to 3,000 now to 3,100. But be warned that we are seeing gold at all-time highs. If we do have a lot of market volatility, if equities do go lower, as we've seen in this downward trend with equities, then you are going to see margin calls. You're going to see traders that will sell anything that they have to sell. So that is one warning from at least one bank.
All right, thank you, Inez.
Thank you.
Stocks clawing their way back from sharp declines at the open, capping off a volatile month on Wall Street. Despite the move today, those major averages facing their worst monthly performance since March 2020. Joining us now is Jeremy Schwartz, WisdomTree Global Chief Investment Officer. Jeremy, it is great to see you. So we did have, Jeremy, some high-profile strategists weighing in today, making some changes, Jeremy, and it made some headlines. And I'm interested to get your take. One was Goldman Sachs, Jeremy. I don't know if you saw this one, but they now project benchmark gauge will end the year at 5,700. And they told their clients these estimates incorporated downward revisions to both earnings growth and valuations, reflecting a weaker base case economic growth backdrop, higher uncertainty, and higher recession risk. I'm curious, Jeremy, you hear those headlines. Do they dovetail with your own expectations, Jeremy? What did you make of them?
It's very interesting. We were calling for a bit of a correction this year, and we had some fears on where earnings expectations too high and that we actually thought rates could pressure higher. And so you're definitely getting some of the questions on earnings, and now rates have gone lower. So actually, our view is that rates could pressure the valuation environment, and it's really not gone that way. I think the really interesting is you hear all this uncertainty over tariffs. It's really the rotation from growth to value has been in full force, and so some of that has policy related, but some of it's just a move from the AI narratives and what's been driving the stocks fundamentally. So even more so than all this uncertainty over policy is also just the real change in what's driving markets. You're going from US to Europe as another example. And, I heard some of the questions of, will we get the certainty on Wednesday and clarity? I think you could still have a bit of uncertainty post this month. I'm not sure we're gonna get all the clarity we all desire. I think this stuff could go in iteration after iteration for some time. The markets clearly don't like tariffs, but what's going on in the markets are beyond that with this other rotation.
And Jeremy, you mentioned tariffs spark interest in international equities. How much of that do you think has to do with currency versus the underlying strength of some of these international equities that you mentioned?
Well, it goes to that Trump is using tariffs, even when you just talked about the Russia tariffs and the secondary on oil and this Venezuela, you're going to have tariffs on the Venezuelan oil imports. He's trying to do a lot of things, and it's beyond the tariff policy. The European defense, as an example, he's sort of reignited the Europeans in sort of trying to defend themselves. Pay for your own defense. We're not going to pay for you as the world's policeman anymore. Where you look at how much debt we have accumulated. I saw some estimates from my friend Jim Bianco, who said 2/3 of the debt was from being a defense spending. Well, now we don't want to do that anymore. You're going to have to go pay for your own defense. Well, now what the hottest trade of the year has been European defense stocks and Europe in general, that we're going to reignite their own sort of fiscal spending on defense, and it's sort of catalyzed. You're seeing Germany outperform. You're seeing Europe perform better than the U.S. in some of that rotation. We're seeing individual investors in Europe move from U.S. to European stocks. So there's a lot more than just tariffs that's causing this big shift.
And Jeremy, you specifically call out long-term potential in India and Japan. Why those two markets specifically?
Well, I think they're the very nice barbell of growth and value. So India is sort of this long-term growth story. Japan is value. You got Buffett buying Japan. They've been our two favorite markets. Actually, Buffett increased his stake recently in those 5 trading companies he's been shareholders of. It's been one of the cheapest markets. There's still some very attractive carry. When you hedge the currency, you get paid 3 to 4% by doing that. And so I like the combination of our allies in Asia. This confrontation with China, I think, is going to be ongoing. I think that's the one market where there's been some excitement, people saying they're no longer battling their tech stocks. I'm still very cautious long-term on China. And so I think this confrontation plays out, and India and Japan are winners over time. And so you got this growth value combination, and those are the two markets I like best.
Yeah, Jeremy, you mentioned China, and the Chinese government has taken a more constructive stance on their big tech companies, especially with the emergence of DeepSeek, kind of proving what they can do in the tech space. Can you talk a little bit more about how you see Chinese AI and tech coming into play, and whether you like that area or not?
Well, that's also what caused NVIDIA to sell off and spark some of the rotation here, is when the DeepSeek model came out. There's this whole question of, will we be using a lot less chips than we thought we were before? And now you've got other questions on, is China going to clamp down on their own imports of NVIDIA chips as much as we've been trying to not let them get some of the NVIDIA chips? So there's all this questions now on NVIDIA. It used to be a very expensive stock. It's come way down. But I think the China, a few years ago, with this talk of common prosperity, started clamping down on their own tech companies. And it was this question of, like, will they let them have success? Was like one of those own internal questions. And they're starting to realize they need some of these tech companies in the long-term shift, and they're trying to become friendlier to the big tech companies. We are, on an economic standpoint, we think they have this overhang from real estate that's going to be very long-term. So we're not overly bullish their economy. And then I think there's going to be this trade tension, trade negotiation. There's going to be some on again, off again. Will we get a deal with China? Can Trump be a deal maker for China? And we'll see some of those headlines go back and forth throughout this year. But I think long term it's a challenge, and I do think they're showing some very tech prowess. That DeepSeek news was very positive for their own capabilities, and people see Baba, Tencent, and these big China tech leaders have some really interesting technology they can build upon.
Jeremy, finally, I want to get your take on gold. Touches a new high. Metal continues to glitter, Jeremy. Why does it continue to glitter, in your opinion? And what's the message we should be taking away as investors?
It's been amazing. I heard your reporter talk about some of the flows. I'd say the flows have been quite disappointing given the move. When I look at what drove Bitcoin last year, the Bitcoin ETFs came to market, huge flows to Bitcoin ETFs, and I think that was definitely driving the Bitcoin last year. And this year, there's been 2 years, the 3-month gains in gold has been very high. It was definitely central bankers last year. I don't think a lot of ETF investors participated. This year, maybe a little bit more, but still, I think people have been underallocated to commodities generally. Gold stands out as the commodity people have some exposure to. We've tried to package gold on top of things like the S&P 500, where we have what we call capital efficient core. We have a ticker GDE, which is our U.S. large cap plus gold for people who don't want to give up on their U.S. equities. I think that's the biggest question on if you try to put in a portfolio, where do you fund it from? Do you sell stocks? Do you sell bonds? If you just put it on top of the S&P with this capital efficient nature, I think that's sort of a more interesting way to do it. But I think people still can allocate a lot more to gold in portfolios than they typically have.
Jeremy, it's always great to see you and have you on the show. Thanks for joining us.
Thanks so much for having me.
Stick around, much more market domination overtime. That's coming right up. Biotech stocks under pressure following the resignation announcement over the weekend of FDA official Peter Marks, the Food and Drug Administration's top vaccine regulator, citing frustrations with the new Health and Human Services Secretary, RFK Jr. Here with what this means for the healthcare space is Jefferies Managing Director, Michael Yee. Michael, it is great to see you. So Peter Marks resigns. It sounds like frustrations, Michael, with RFK Jr. Walk us through what you make of this news, the ripple effects. What are investors, Michael, and innovators supposed to make of that headline?
Good to be here with you. Look, I think on one side of the coin, this type of news adds to the uncertainty across the whole space, which obviously started with the appointment of RFK a few months ago. Obviously, pharma tariff, obviously high interest rates, a lot of the things that have challenged the space. So, this puts a little bit more concern into the group, and obviously the group continues to trade poorly this year. On the other side, we've had a lot of discussions with investors about the more medium to longer term, which is the fact that obviously stocks are still cheap or getting cheaper, and pharma still needs to look at some of these things to acquire. And more importantly, as it relates to Peter Marks, that is probably more a reflection about his oversight over CBER, or the vaccine group of the FDA. And obviously there's a lot of scrutiny going on the vaccines rather than other areas of the FDA. So fundamentally, not too concerned about the longer term.
Michael, Christine Short here. President Trump has talked about the potential to bring biopharma manufacturing back to the U.S. by imposing tariffs on products made outside of the U.S. And I'm wondering how you think that impacts the space. Are there specific names that have more exposure or be hit more directly by tariffs?
That's great. Look, in the large cap space, we actually put a note out last week, and we had basically the top 10 pharma biotechs. I can easily point out that Vertex stands alone as one of the only companies, actually Vertex and Biogen, as one of the two only companies that don't really have any manufacturing outside the United States, specifically Vertex, and they ironically have the highest tax rates. And we do like Vertex. The other companies, we spoke with Amgen, we spoke with Biogen, we spoke with many others. They all sort of generally have other manufacturing. Look, Amgen and many of these other companies, Regeneron, do have Ireland manufacturing sites, so we do have some concerns about their exposure there. The bottom line is this. This is another area which people are concerned about. However, like many of these spaces, there's kind of nowhere to hide. A lot of the whole sector obviously has been very tough. And at least in large cap pharma biotech, these stocks are not expensive. We know they're going to have put up strong Q1 earnings. And so overall, it's kind of like, where are you going to hide? So we do like Amgen, we like Gilead, we like Vertex as the best places to be in large cap biotech. And those stocks have been up 18 to 25% year to date. Some of the best performing stocks. Nobody tells me they're expensive. Nobody tells me that there's some huge concern on a Gilead or a Vertex. And these have been generally good places to be. And unless you're telling me all of a sudden tomorrow is going to be back to Magnificent Seven and everything's great, I think it's going to be a challenging year. And this is a good place to be for some more defensive exposure.
You know, Michael, we were talking about Peter Marks. Curious to get your thoughts, though, about the FDA Commissioner Marty Makary. What do investors need to know about him, Michael, going forward?
Yeah, it's a great question. One of the things we're trying to do is stay fundamental, although obviously staying fundamental has been tough for traders. A lot of our conversations these days with funds are, we're all about fundamentals. We've been sticking with fundamentals, yet obviously all these stocks are down. And so what we would say about Marty Makary, and have had a bunch of discussions with various lobbyists and other people who know him, is that he has been heralded as fairly pragmatic, fairly rational. He's obviously a trained physician, which you can't really say about RFK Jr. And obviously with some sense that he does actually want to make the FDA more efficient and wants to get more drugs approved faster and better. So even though there is a concern about vaccines and all of the things that are associated with some of the scrutiny as it relates to all of the political pressures around that, it is definitely likely that Marty Makary is going to be focused on making the FDA great, which includes making sure drugs are approved, making sure there's important life-saving drugs moving through the pipeline, and obviously good for biotech. So not so concerned about Marty Makary, but what I would say is this. We're telling clients, with the biotech sector down so much, with so much concern out there and so much reflected in the space, it's kind of like, look, if we look forward 3 or 4 months, things are still getting approved. I'm looking for Gilead's new HIV PrEP drug. That's a big one by June 19th, and maybe even some controversy about that one as it relates to HIV. Let's get back on pace. So much negativity out there that if Marty Makary is out there and trying to calm the markets and saying we're going to be focused on science, that's probably a positive.
Michael, we're always lucky to have you on the show. Thanks for joining us.
Thank you. Great to be here.
Rating agencies do not appear to be getting optimistic on fiscal improvement for the U.S. government. Yahoo Finance's senior columnist Rick Newman joins us now with more. Rick.
Hey, Josh. 2 of the 3 big rating agencies have already downgraded U.S. debt. That's S&P, Standard & Poor's, which did it back in 2011, and Fitch did it in 2023. Moody's is the one that still has a AAA sterling rating on U.S. debt, but they sound like they may be reconsidering that. So they put out an analysis recently. I'll just give you a couple quotes from this analysis. U.S. fiscal strength is on course for a continued multi-year decline, driven by widening federal budget deficits, a rising debt burden, and falling debt affordability. They say that the U.S. debt position is far weaker than any other country that has a AAA rating. So these rating agencies don't come out and say it outright. We're considering downgrading a country's credit rating, but it sure sounds like they could be getting to that conclusion.
Hey, Rick, Christine here. Part of the reason for the downgrades has to do with the lack of impact from DOGE improvements, the lack of that $700 billion in tariff revenue that we were supposed to be seeing. Of course, with the story changing so frequently, it's unclear of what the trade policy will be. One of the major campaign promises the Trump administration made when they were on the trail was that they would renew these expiring tax cuts for businesses and for folks like us. That money was coming from some of the tariffs and the other improvements that they were set to make. Do you see a possibility where we don't get a renewal of these tax cuts? Because obviously the money isn't there. And that was certainly something that people voted on.
I don't think so. I think those the extension of the tax cuts are coming for sure. That is a top Trump economic priority. It's up there with tariffs. If you could say 2 Trump economic priorities, extend the tax cuts as one, and impose tariffs as another one. I would add to that, actually, Trump has actually promised at least 10 or 12 additional tax cuts. I mean, go back to the campaign, no tax on tip income, no tax on Social Security benefits, some other things like that. And Congress is trying to figure out how much of those new tax cuts can we stuff into a big bill by the end of this year. So I think those tax cuts and tax cut extensions are coming. Doesn't mean they're coming permanently. They, in order to make the budget math work, I mean, this is one of the sort of parlor games inside the Beltway in DC is how are they going to make this budget math work? They could say, well, we're not doing this permanently. We're only going to extend these tax cuts for, who knows, 2, 3, 5, 7 years, something like that. There could be a whole mix and match with different tax cuts and things like that. But that is coming. But at some point, this is just not going to work anymore. There is no way around the fact that those tax cuts are going to make the national debt even larger. And Trump can say, oh, we're claiming all these savings from the Doge cuts, from killing federal agencies and stuff. I mean, real budget hawks are looking at this and saying, this doesn't add up to very much. There's a lot of smoke and mirrors here. You cannot fool the bond market with the amount of debt the Treasury is going to be issuing. So something's got to give. We're all just waiting to find out what it is.
All right. Thank you, Rick. Appreciate it.
Yep.
That'll do it for today's Market Domination Overtime. Big thanks to Christine Short for hanging out with me today. Thank you, Christine.
Thank you so
Very
much for having me.
helpful.
That was very fun, yeah.
Excellent. We have a lot of ground in a short amount of time.
We did. We covered it all, yeah, pretty sure.
Thank you. Be sure to come back tomorrow, 3 p.m. Eastern, for all of your coverage leading up to and after closing bell. On the other side of the break, it's Asking for a Trend. I've got you covered for the next half hour with the latest and greatest market-moving stories so you can get ahead of the themes affecting your money. Stay tuned.